And it's time for the word on Wall Street. Top advisors watching your money. Joining me now, former editor of the Gartman Letter and University of Akron Endowment Fund Chairman Dennis Gartman, and CapWealth Chief Investment Officer Tim Pagliara. Guys, it's great to have you both here, and good morning. Tim, I want to start with you. Futures, as you can see, we've got some green arrows going into the three-day holiday weekend. Dow up 60, NASDAQ up 46 and change, S&P up more than 8. A big piece of this is Nvidia. That chipmaker saw a 24% rise. They posted an $11 billion sales forecast on Wednesday. They're on track to become the first of their kind to hit the $1 trillion valuation mark. So, Tim, I want to get your thoughts on the sector and also the demand for AI. We've had a guest already this morning say that Nvidia, the stock, is frothy, and you need to look in some other pockets of the sector for investment opportunity.
Well, good morning. And I would echo those sentiments with 2 points. First of all, Nvidia is a trade. It's not an investment. When the valuation of a company hits certain metrics, and in this case, the best example is 40 times sales, investors should be cautious because it's unsustainable. The second point is that AI is not about the chip. It's about the applications that will come from the chip and improving outcomes. So, for example, as a basis of comparison, Palantir, which will be a tremendous beneficiary of the chip itself in improving the outcomes of their enterprise software, that sells at 6 times sales versus 40 times sales. There was a suggestion yesterday that the Intel or Nvidia is trading at 7 times the market valuation of Intel, and that they should probably just issue a convertible bond and buy the company at this point. So the hype has led to a very, very frothy stock that people will look back on this point in time, I believe, years from now and wonder what they were thinking.
All right. Well, I think that's something that's already been brought up, and you're right. I mean, especially in the case of Nvidia. But Dennis, react to that really quick. I mean, this is the investment play right now. But do you think that it's being overdone?
I think those types of price to sales numbers, you have to stand to the sidelines and say, you know what, this looks awfully like the 1970s with the Nifty 50. A year later, the Nifty 50 were suddenly the unwanted 50. You have to be very careful. I would not be buying Nvidia at this number, and I think that the gentleman before me had a great application. The fact that it is the application of the chips, not the chips themselves, that are important. So I thought that was a brilliant comment on his part.
All right, Dennis, let's move over to PCE. We're getting that at 8:30, income and spending. This is the favorite read of the Fed when it comes to inflation. So the April PCE index, again, 8:30, core estimates show a month-over-month rise of 0.3%, 4.6% annual. We're also getting durable goods at that same time. So what do you expect from all this data that we're getting dumped on from the government on a Friday going into a holiday weekend?
I think you have to be very careful with the numbers. They are prone to massive revisions, such as we saw last week or 2 weeks ago in the employment numbers. You have to be very careful. The revisions in durable goods can be almost 1% plus or minus from 1 month to the next. PCE, I think it's going to be up 0.4%, and earnings will be up 0.4%. So too shall the sales. I think you probably have to be very careful about that number. And I think the Fed is going to be looking at the data, no question about it. They have said that they're going to be data specific for the next 2 or 3 weeks. They have to be, and PCE is their favorite number. So let's see what the number is. I think it's going to be 0.4%. If it comes any higher than that, that'll be deleterious to share prices, because that means that the Fed will actually have to move with a tightening of monetary policy. I think that Mr. Powell has made it abundantly clear he'd like to sit tight, however. So he wants to see 0.3%. I think you'll see 0.4% in the PCE. And I think that they'll be watching the data coming out for the next several weeks. Yep. This is an interesting period of time, to say the very least.
Well, we'll see. And you're right. We also learned from the Fed minutes, Tim, when we got that earlier this week, that there was definitely some discord among members about, the path forward. Do you pause for now and see if these rate hikes, we've had 10 straight rate hikes now, if that needs more time to filter into the economy, bring inflation down, or to Dennis's point, if they're going to be data dependent, you get a hot number today, and that could be bad for the market. Tim?
Well, I think you continue to listen to the Fed, and to echo those sentiments, they have said very clearly that they are going to be data dependent and that their target is still 2% for inflation. And that's what you follow instead of speculating on where they're going to go. They are telling us what they're going to do in very clear terms.
Yeah, well, you're right. If somebody tells you that they're, going to do something, believe them. I guess that's you both agree on that one. Dennis, Tim, guys, it's great to see you. Thank you so much.
Thank you,
Happy
Cheryl.
Memorial
Good to
Day.
see you.
All right.